Hey guys, welcome back to another video. Today we're here to talk about the stock market and kind of the position it's in and where I see it going in the near future. So yeah, without further ado, let's get right into it. Be sure to like this video and also subscribe if you enjoy this content. I'd really appreciate it. Let's see. So we can see right now that the stock market is very volatile. I mean, even just in my account, we're down 2%, before market open, and we were up all the way almost 5% during the market, and now we're sitting at around 2.5% up in the portfolio. But we could see this past week down 12%, but there have been some crazy jumps that, I mean, it doesn't even look that big, but it really is, or just loaded in right there. But yeah, I mean, look at these jumps that, we can see we hit a low of 12,900, but then we went all the way back up to, 14.4K. Yeah, and then down a lot, in the past, just in the past while. Been down a lot, even in the past year. So this market drop has definitely affected my portfolio, but that's what I wanted to talk about today is this a market correction, a market drop? What separates the two, when to buy, which one, how to know which one's better. So we can see it in this article right here, in US Wealth Management. This is what a market correction looks like. So you can see global equity markets are in full retreat in the wake of global trade turmoil. President Donald Trump's April 2nd announcement subjecting imported goods to sweeping new tariffs prompted a swift market reaction. The S&P 500 declined more than 10% in the subsequent two trading days. It's a lot. That's a lot. U.S. stocks are now firmly in correction territory, representing a decline of 10% or more from peak values. They're down more than 10% from peak values, I can say that. And approaching an official bear market, a drop of 20% or more. So a bear market is when, the stocks are just going down and down and down. This because we were in a bull market for such a long time. We kept reaching new all-time highs. That's a bull market. Now we're reaching lows. That's a bear market. Dropped 20% or more, which we're almost at. And small cap stocks already crossed into bear market territory. And 2025's market struggles stand in sharp contrast to the prior 2 years when stocks gained more than 25% each year. So the thing that I wanted to accentuate this video is this isn't that big of a deal. I'm not worried at all. I don't, not at all. The thing is that, stocks do this all the time. Um, you can see right here that S&P was at, it was in the $600 range. That was just a week, but we can see, past 3 months, the S&P was at $612, and now we're down all the way to 501. That's almost a 20% drop, almost correction territory. But I mean, we can look at the graph too. This is a sizable drop in the all-time chart of SPY. This is definitely, something to look at and think about. But at the same time, you got to think about it. The president doesn't want to crash the market. I don't think that's his goal, but people just don't like, people are fearful. They're scared to invest because of what he's doing in the market, and that's valid, but I don't think that's something to base your investing thesis off of. But there's so many opportunities in the market right now. AMD, you can see right here, it's at $82 today, up a little bit on the day actually. A good amount. It's up around 5%. It was at 77. We can see that's one of my biggest holdings right here. That's definitely, I mean, I have a much higher average cost than what it's at right now, but I'm completely fine with that. I'm dollar cost averaging into the position. I bought a new position that I've been talking about for a while, Meta. This is one that I've been meaning to buy for a long time, but yeah, I mean, I didn't put a lot into it, but definitely going to keep buying shares of that. Definitely also have some more money I'm going to deposit pretty soon and buy some more shares. And we can see SoFi. This is in bear. This is in bear territory right here. SoFi was all the way at $18, and now it's below 10. So this is a stock that's definitely in the bear territory. It is a small cap. It just classifies that, and it makes a lot of sense that it is where it is because it's in that small cap sector. But this is one that hurts to see go that low because I know it's worth a lot more than that, and definitely gonna buy some more SoFi shares pretty soon here. And then Amazon. People were talking about how Amazon's an easy buy, and there's not a lot to say about Amazon, but I think that a lot of people don't own Amazon. a surprising amount of people, and I think that's kind of crazy because this is a stock that everyone needs to have. This is just a base to your portfolio. It can be, it should be. That and Meta, I think, are two that, are really good stocks to build your portfolio around because of the company's, creativity and what they're doing in their market space. And they're both undervalued. I mean, it's not even a question, it's a fact that both these companies are undervalued. Um, and then we can just keep looking at the portfolio, but I just wanted to show you guys that, there is a lot of money to be made in this market because stocks that, like, we can take a look at all these companies. All these companies are great companies. Meta, Amazon, but guys, you can't be scared in these markets because if we look at Meta, let's look at the past 5 years of Meta. Okay, Meta's a growing company, quarter over quarter. You can see that every time they've dropped, they've gone back up, and this is true for all time in the company. You can see they dropped right here. They had a very steep decline, but not even a year later, they already 2 years maybe they beat their all-time high from what it was before. So if you invested right here, you got in at a very low price when you could have gotten in at a much higher price. You got in at that low price, and then they passed their all-time high from that low price in only 2 years. So I don't even see this taking 2 years, but we can see that Meta's all-time high is $740. I don't think that that's going to be Meta's price when it's all said and done. I don't think Meta's going to be worth that much. I think it's going to be a lot more. So getting it for $512, I think, imposes literally no risk. If you're a short-term investor, maybe. If you're a short-term investor, then maybe wait for Meta to drop more if you think that's what's going to happen. But I'm not a short-term investor, so I could care less what Meta does in the next few weeks, in the next month, in the next year. I don't care. If it drops lower, I'm going to buy more shares. If it goes up, perfect. I'm making money. I'll still, dollar cost average, but I'm just saying, I'm just trying to show you guys how easy this money is because Meta's not gonna, be a $740 company and stop. Meta's not gonna have that be their all-time high. That's just not who the company is. They're not even a really old company, founded in 2004. So this is relatively early to get in if you think about it. But that's what I'm trying to tell you guys is that Meta is not a business that's peaking or it doesn't have any signs of, slowing down anytime soon. So the fact that $740 being the 52-week high and it being $512 right now, I think there's a no-brainer purchase going on here. It's 41% higher than what it is right now, about 42. So I think there's a free 42% that's risk free that's going to be made from investing in Meta right now. And when you make that, I don't know, but I don't think it'll be that long. I don't think it'll take that long to make that 42% back. And then same thing with a lot of other stocks. That's kind of my investing thesis for a lot of these stocks, but even Nike, we could see on just the past year, their all-time high was, or not all-time high, their 52-week high was $98. It's $53. It's 50, almost half of that. So it was up 10%. Now it's down 40%. We'll call it a 50% drop in Nike share price. It is what it is. And we can check their stock's all-time high, which is a lot more. We can see that it was in the 169. We'll say 170. I don't think Nike's highest price ever is going to be 170. I think it's going to surpass that. It's not a company that is going to fail, I don't think. The swoosh is everywhere. I believe in it heavily. And these tariffs might slow them down. It might be something in the short term that pushes the stock price down, but long term, Nike's not going to let that happen long term. So I think it's very important when looking at these companies, especially right now, to think about what you're investing in and the price that you're buying it for. And just reflect, compare those two very closely, because Nike is a company that I'd buy for a lot more than $54. So if I can get it for $54, that's a steal. I want even more. And we can see, look at this. The Nike director buys stock. So he might know something, I don't think he's buying stock for no reason. So yeah, guys, that's really all I have today. I just wanted to show you guys that there's so many stocks in the stock market that are insanely undervalued that need to be taken advantage of. We can see Bitcoin's even recovering a little bit here. But yeah, guys, there's you guys just have to take advantage of these stocks that are undervalued. I really hope you do, because I don't think the market's going to stay like this forever. It's a temporary drop. I don't know how long it'll last, because I know the president doesn't want the market to be doing this. So the tariffs are something that are probably going to be short-lived, in my opinion. I think that this was kind of just a move to get maybe more people into the market, or scare some people out. Not 100% sure. If I was, I wouldn't be doing this right now. But yeah, guys, I appreciate you for watching. I'll catch you in the next video. Be sure to like this and also subscribe to the channel if you enjoyed the content. Comment down below what other kinds of videos you guys want to see, and appreciate you. See you in the next one. Peace.